What's going on, guys? Bulls and the Bears here, and in today's midweek update video, I'm going to go over how I went rogue with my Nike position. So we're going to cover that first and foremost, right after we just take a look at this account here at 21,950, down a bit today, 1.5%. I think the market is down about 1.5% right now, SPY, never mind NASDAQ, which is down even worse. Not great. The account's looking pretty horrible ever since really Nike had its big earnings drop. Here's the 1 year look. You can see the account pulling back from the highs quite a bit and struggling. And a lot of that, as I said, had to do with Nike. My other positions weren't doing so hot either. SOFI, Match, McDonald's were struggling as well, which aided to this decline. Those positions have since recovered, I gotta say, pretty nicely. But Nike was giving me problems. And if I go to Nike's chart, right here, I had some promise. I did have some promise with this thing on Thursday when CPI came out, tech was selling off, and value beating down stocks was rallying. That's what happened right here. This is a very encouraging sign. But then Friday, that seemed to kind of reverse. Nike didn't really do much. Tech started to bounce back. But I still had that sentiment of like, okay, I think value might get its time. And then Monday came, and Nike absolutely collapsed down to new lows, 71.24. So new lows after I thought value and Nike in particular was going to catch a bid and start to rally. So, I mean, I still had a bunch of time on it. December 2025, you know, it's just one bad day, but I made a hasty decision. I was fed up with this thing. Plus, I have extra consumer discretionary exposure with McDonald's because Nike and McDonald's are in the same sector. So that's a little bit of a big exposure to one sector, consumer-dependent sector that has kind of been pretty weak lately, except from Tesla, which is a whole different thing. But yeah, things weren't looking good. I made a hasty decision, kind of a premium play, in an attempt to kind of correct this position, correct the loss I had on Nike. So what did I do? Did I sell a bunch of puts? Did I close everything else out and sell a bunch of puts on Nike? Did I buy a ton more leaps to lower my average down to 75 or something and improve my position? Put a bunch of money into it? No. I closed it. I completely removed Nike. And I took a $2,700 loss on the leaps. And this is a net, including the original leap. So the whole entire net trade, everything included, the leaps was a $2,700 loss. The premiums collected to that point was over like $500. So the total net loss altogether with Nike from beginning to end, premiums included, is $2,200 on the dot. $2,200. Why did I close it? Because I saw, like I said, a premium play, an opportunity to really get a lot of that back with just one play, honestly. And that was with Meta. So the rogue decision was to cut Nike and buy Meta instead. I had $9,800 in Nike, so I maxed my policy limit with the position. I went over that in my last video, over $9,000 with Nike. So I said, instead of having $9,000 in Nike, let me put the same amount, $9,000, $9,700-ish, into Meta, a Mag 7 stock, a stock that's been trending higher, a stock that's not in consumer discretionary, but instead in one of the hottest sectors in the market, IT. Well, actually, I'm sorry, consumer communication services, but it's basically an IT stock too. And let me collect some great premium on it because it has earnings at the end of the month. And I saw premiums on Meta covered calls worth over $2,300, which would be essentially more than enough to cover the entire Nike loss in just one covered call because of the earnings volatility and whatnot. So my eyes kind of lit up to that. I could get into a tech stock, I could get into a Mag 7 stock, one that's trending higher, and collect so much premium that it kind of wipes away Nike all in one play, one covered call, which is about 3 weeks. I didn't really think much beyond that, and I pulled the trigger, which was a very hasty decision. At the end of the day, it's still Meta, still a top 10 company in the world. But was this the right decision? Was this a sound decision? That's debatable. Since I sold Nike, it has gone up. It went up yesterday. Because I did this on Monday. So it went up Tuesday and it's flat today. It's slightly down today. The market's just getting killed. And you know what's getting killed the most today? Tech. You know what Meta is? Tech. Meta's down 4% today. I got in on Monday at the close, right here. This was Monday, Monday's price action. I got in right at the end of the day, pretty much bottom ticked Monday evening here, and bought a leap right here. When Meta was at 493, I bought a leap expiring next September, so about a year and 2 months out. And I bought the $485 strike. I bought it when Meta was at 493. And it popped soon after, so I was already up. Monday came, it was up even more than that, up to $503, $10 higher than when I bought the leap, so the leap was doing good. I had already sold a covered call, but it was up, which was good. And to this point, I mean, it was down already like 8% or so, like from up here, 540. So it already pulled back quite a bit, you know, $40 per share, 8%. And it was kind of at some support levels, recent support that you kind of see right here, you know? So I'm like, all right, let me pull the trigger. Let me finally jump into this on fire sector, these IT stocks that where every time it pulls back, it just makes a new high. Let me finally do it. Let me get into an uptrending stock as opposed to a stock that's selling off into support. Let me finally do it. And what happened? Well, Meta is down $20 since I did that. $20. It's about like 5%. It's down about 5% since I got in. $20 sounds like a lot, but it's really just 5% because it's such a high price stock. Obviously, it can move quite a bit. And yeah, not going so hot because the 2 days after I got into this trade, Meta's been down, Nike's been up. So wild. Say what you want. But it's done. The fact of the matter is this is done. So I bought the leap on Monday, and I immediately sold a covered call for August 2nd, which is the week of earnings, at the 500 strike. And I collected $2,380 on the covered call, which, like I said, is more than the net loss on the entire Nike position. So regardless of what Meta does, if I collect that premium 100%, it essentially covers the entire Nike loss and then some. So when I saw that, I was like, you know, let me do it because Nike's is already making another new low. Meta's a hot stock and a hot sector. Let me finally jump into it and collect this premium and wipe away the Nike loss in about 3 weeks, you know, with the covered call premium. And then whatever Meta does in the meantime, I'll just deal with Meta as the new position, which it's a Mag 7 stock, top 7, top 10 at the very least in the world. I mean, how bad can that be? So I went for it. And here we are, already kind of suffering a little bit. But, I mean, the price action on the day-to-day really doesn't matter up until August 2nd. Because I have a covered call. So, like, really nothing matters until that call expires. Then we figure out what we're going to do from there. So we really have another 2.5 weeks before we can really start to care about where Meta is trading. And then, of course, there's the earnings element. So who knows what's going to happen after earnings. Last time it dropped, it closed down 10%, but it dropped 15% after earnings last time. So it did come all the way right back up, but you never know. Earnings can be a pretty big move, and if it goes to the downside after it already sells off, all of a sudden Meta's down here at 400, and I'm stuck up here, basically signaling the top of the market, the end of the tech run. Me going long finally in tech is going to be the top of the market, which is really why I don't trade like this. I usually don't buy the uptrending stocks. I don't participate in Robinhood with a chart like this. Even Palantir, which is just going straight up. Like, I don't play it because I like to be safe and comfortable buying at support, not when it's making new highs. Because my fear is that once I get in at a high in an uptrending stock, then that's going to be the point where it corrects, and the correction when you're stuck at the high is going to take a long time to play out, and then you got to wait for it to come all the way back up to a new high for you to get back to break even. I don't like that proposition, but it does kind of work out most of the time because you are playing an uptrending stock. Like, you're going with the trend. The odds are it's probably going to go higher, even though it's not necessarily at a support level. But the problem is, a lot of times when I play stocks at support, you know, they only get there by selling off, so they're kind of weak to begin with. I get in at support, but because it's a weak stock, it usually continues to go lower for a little bit, and it becomes a pain in the ass, really. So I decided to finally participate in one of those uptrending stocks, and so far, all it's done is go down. So very impeccable timing. My worst fear is playing out at the moment, which is, like I said, getting caught at the top of a big move here. But this is just 2 days. It could easily turn around quick, as we know. But this is the fact of the matter. This is the position. And if I go to my positions over here and back in Robinhood, you can see Meta is already down $1,500. But I'm up 1,000 on the covered call at least. So the net isn't as bad. But so it's going to all come down to earnings, where it ends up after earnings, after the covered call is done and I collect that premium. Then where does Meta stand? That's going to be the key. So Meta is the new position instead of Nike. Was it the wrong decision to make? Possibly. It's possible, because maybe we're starting to see a rotation out of tech into value. That might still be continuing to play out. When Monday came and Nike made a new low and tech was doing fine, I was like, all right, maybe there isn't going to be that rotation. But now it seems to be kind of happening again, playing out that way. So we'll see. Maybe it's a 1 week, 2 week thing. Maybe it's a 3 month thing. I don't know. But I have Meta till next September. That's a hell of a long time. That's 2 fantasy football drafts away from now. So I got to just be patient, which is something that I should have done with Nike, which is be patient. But here we are. Now I got to be patient with Meta. And patience is so key. Patience is key. Because I'm looking at other stuff. Going back to TradingView. Comcast. You guys knew I was in Comcast. I got out at 38.50 because I was tired of the position doing dog crap. I mean, I had earnings way back here. Shortly after I got into it, it fell and it just was under my cost basis. My shares were in a loss the whole time down here. Every time it seemed to make a push up to my cost basis of 40.50, it would just come all the way back down. And it just looked so terrible to the point where I was okay taking a $200 loss just to be done with it. And that's what I did right here on this pop. I got out at 38.50. And now, just a few weeks later, we're back to my cost basis. Just a couple weeks later. I waited 3 months. And all I needed to wait was another 2 weeks. And we'd be right back to my cost basis and my shares would be doing fine. Look at this move here. Up to over $40 now. The highest has been since earnings, where I pretty much got into it. Another one is Match Group. Now we're getting into the positions I hold here. So we're going to start with Match. Well, we already covered Meta, so now we're move on to Match Group. Same thing. Exact same thing as Comcast. Literally the exact same thing. Because I got into Match and Comcast at the same time. Both trades were very similar in the sense that I sold the cash secured put kind of at a high level. A little bit of a high level. I got impatient because this green zone is the support, is the demand zone that I'd want to play in. But as you can see by the blue line here, this is my cost basis. So I got in above the support zone because I was itching to get into a trade. At the time, I had a lot of cash on the sidelines, and I was waiting for opportunities to show up. I just looked at Match and Comcast and said, that's close enough. Let me get a put sold. Let me get into this position. Comcast is over here. The green zone is the demand zone, but I got in up here at 40.50, right above the demand zone. So I got in a little prematurely on both trades at the same time, and both of them had earnings at the same time, fell by about the same amount, 6% for Comcast, 5% for Match here, and they both just struggled under my cost basis after earnings. struggling to move higher. Every time it tried to, it came all the way back down. So really the same story. And then the same week, as I just showed with Comcast, Match is now back to my cost basis for the first time since I got into the trade. And I still have it, but I sold a covered call, just like Comcast, below my cost basis, willing to get out for a little bit of a loss just for the sake of getting out of it. When all I had to do after waiting 3 months was wait a couple more weeks of being patient to get this nice move and sell calls at an appropriate level and maybe even make a profit on the shares. It's still going to be a net total profit on the whole campaign because of the premiums I've collected up to this point, but I'm going to be giving back about like 60 or 56 bucks in this trade right here, with the covered call being $1 below my cost basis. Patience is key, guys. Patience is key. Just horrible timing. Match had this really nice move here after hours, after there was a Starboard, an activist investor, declared a huge stake in the company, offering guidance saying, you know, maybe they should explore a sale or go private. They're saying the shares and the company is very undervalued, so it really popped, and it's been sustaining this level up here now at about $35 per share. But again, I'm locked in with a covered call at 33 for August 2nd too, so I got to wait another 2.5 weeks and go through earnings before we find out what actually happens with this trade. But if I was just a little more patient, moral of the story, I would probably be able to get out of this thing like this week. You know, I'd be selling a weekly call instead of one that's out to earnings at a good level. Shares would be profitable. It could be over. But instead, I was impatient, and I'm in a worse position as a result. Next, let's go over to SOFI. And wow, I can't believe this. I mean, really, since inflation came out on Thursday, there's been the stigma here of getting into beaten down stocks, getting into basically the parts of the market that hadn't been seeing any love, like small cap stocks, like beaten down value, like I was saying with McDonald's and Nike, for example. SOFI benefiting like crazy. The chances of rate hikes drastically improved. I'm sorry, rate cuts drastically improved after the last inflation number, which also helps small regional banks or small banks like this, only $8 billion in market cap. So it's just been on a tear here. Just hit a high of $7.91. Absolutely insane here. What a lovely move. Now, I was kind of somewhat, maybe a little bit impatient with SOFI because I sold covered calls a couple weeks ago for August 2nd because I was looking to sell weeklies as I usually do, but it was down here at like 640. I would have to sell calls at 7. It was just way too far out of the money for me to collect any good premium. So I instead looked out 1 month to August 2nd, the week it has earnings, and I saw, obviously, a good amount of premium. And the premium actually amounted to a healthy 45% annualized return. So I was like, okay, let me just do that. Let me sell calls at 7, collect a 45% annualized return, and just let it sit for the next 4 weeks. My calls are in profit territory at the $7 level, so why not? Why not collect that premium and at a safe level and just let it work? And that's what I did. So the position's fine, right? Like, I have covered calls for collecting good premium, and it's at a profitable strike. So there's really nothing to regret here. But look at this move. And unfortunately, although my shares are up $1 per share right now at $7.75, up $1 per share, I'm only qualified to get 25 cents because of the covered calls. So a crazy move, and if it sustains it or even goes higher after earnings, I'm only getting 25 cents. I'm only profiting up till $7 a share. So a little bit unfortunate there, but that's just the nature of selling calls. And like I said, it's at a profitable level, so there's really not a lot of, there's like no downside at all. There's really nothing to regret. Like, I'm still going to make 150 bucks on the shares if it stays up here, plus 200 on the call premium. So like, it's going to be a great trade, but just goes to show a little bit of the downside of selling calls. At the end of the day, I'm very happy it's making this move because I'd like to get out of the position for a profit, call it a success, and move on. Take that $4,000 back. My other position is McDonald's. Also having a good time. Back up to 260 bucks, the first time it's been there since about the late June. So it's been a few weeks now. We hit as high as 262. That's awesome. So if there really is that move happening from, growth into beaten down value, I do still have exposure to that in the form of McDonald's, which is starting to benefit here. You can see I have some resistance lines here, these trend lines. We broke through this one here, breaking out to the upside. That's great. We still have this bigger one up here that could be resistance around 265. But, the position's looking great because I got my leap at 255 and we're at 260. So my leap is up about like $400 or so. And I have a covered call sold at 260. Now I kind of made a couple moves here. In addition to the hasty Nike trade getting into Meta, I went rogue everywhere. Not just Nike into Meta, but with my McDonald's position too a little bit, because I originally had a monthly covered call at 260, expiring the week of earnings on August 2nd. But I was starting to get a little bit concerned about how much earnings I'm exposed to. I mean, literally SOFI, Match, and McDonald's report within 2 days of each other in the same week. And I'm already locked into earnings for both SOFI and Match. So being exposed to earnings for McDonald's too, I was like, oh, maybe I can kind of roll that monthly call forward to a weekly call again. So that's what I did. I closed the 260 monthly call. And I opened this 257.50 right here for this week. So I realized a $60 loss on the monthly call. But then I sold the weekly call for like $77 to where the net credit is actually 17 cents. Whatever the premiums were, the net credit was 17 cents. So I covered the loss that I took on the monthly with the weekly premium. And that put me back to a weekly cycle. So now I have a lot of flexibility. I can always roll to the next week or just close the trade right there. I don't necessarily have to be locked in for earnings. I could maybe get out this week or even next week before earnings because I'm back to the weekly cycle. The next day, after having slept on the rogue decisions that I made on Monday, I decided that, the monthly call is actually a pretty solid idea. I do think McDonald's is going to have a strong push. I do think it could have a nice push after earnings. So I think it actually might be worth playing earnings with McDonald's. I like my overall position as it is, given the support here and the new, what I think is new kind of sentiment to favoring these beaten down value stocks. I think it's worth holding on to this thing a little bit longer. So I rolled the weekly call back out to August 2nd. So I'm right back to the same covered call that I had. I rolled it back out to 260, the 260 strike for August 2nd, the week of earnings. But funny enough, rolling back out to 260 for August 2nd, the same covered call I had originally, I was actually able to increase my total premium by $55. So I originally sold the 260 for $212. Now I have a net credit of $267. So I increased my net credit on McDonald's by $55, which is like a 25% increase from the premium that I originally had by rolling it forward and then rolling it back out again, because McDonald's had a favorable move is why, because it went from 250 to 255 in one day, and that was the day where I made that roll and collected a bunch more premium. So, all right, we're back at the 260 covered call for the week of earnings, which is July 29th, Monday morning, to kick off the week. And I think it's going to be a fine earnings move. I think the stock is going to start to get some love, and I think after earnings it could have a nice push as well. So I'm very favorable on this trade. It's working out so far so good. I just have to wait a couple more weeks. So in summary, SOFI is doing phenomenal. And at this rate, we're probably going to get called away. We have to endure earnings. Maybe earnings completely changes the story, but given the love that it's been getting, earnings might only make it better. This looks like it's going to roll off the books at the end of the month. Match Group, given the activist investor and the newfound momentum here, it also has earnings we'll have to endure, but the momentum might suggest it might go higher from there. That might be called away. McDonald's is finding some newfound love, reaching highs that it hasn't hit since June. Early June, over a month. It has earnings as well, It's a beaten down stock. I think it could have a favorable move. This position might be rolling off the books at the end of the month. And now Meta, this is a whole different story. But this actually reports earnings as well on July 31st. So every position I have reports earnings within 2 days from each other. McDonald's on the 29th, SoFi on the 30th, Match on the 30th, and Meta on the 31st. The last week of July is going to be insane. But for SoFi, Match, and McDonald's, I actually feel very confident that they'll have a nice move, and I'll probably be done with the trade altogether. Meta, I'm not sure. But it is shaping up that is possible at the end of the month. Meta might be my only position that I have. And who knows? If Meta has a good earnings report too, if it turns around in the next couple of weeks, and it closes over 500 on August 2nd, that position could be done too. And all of a sudden, my account would be completely clean. Nothing open whatsoever, sitting at all-time highs, and we start August with a blank check, with a clean slate. So that would be very interesting. But Meta is definitely that wild card, and the way it looks now, if sentiment truly is changing, then I have the worst luck you could ever imagine. So that just about does it, guys. That covers everything, including the crazy move I made with Nike, moving it into Meta. Let me know what you guys think. Did I pick the absolute worst time to do that? Is this rally about to end for tech in the Mag 7? Am I about to be caught with my pants down? I do have over a year. If it does kind of stop here, will it come back within a year and 2 months? I don't know. We'll see. So far, 2 days in, it's looking like the wrong move because Nike is higher than it was when I sold it, and Meta is much lower than it was when I bought it 2 days in. That's the thing with the market. Every decision you make, time will tell. Your opinions, your theories, time will tell. You will find the answer eventually, and we'll just have to let it play out. So there's really nothing left for me to do with these positions because they're all locked in for August 2nd with covered calls. And that's the week of earnings as well. So there's really nothing that I can kind of do here. We just got to wait for the next couple of weeks, let earnings play out, see where the positions lie at that point, and then go from there. At the very least, with all the premium, the covered calls that I have outstanding, assuming that the stocks all drop, nothing gets assigned, nothing gets closed for a profit, it's just I only collect the covered call premiums, the month should be about a $650 to a $700 month. That's great. That meets my target. At best, if these positions roll off and I close things for profits and I get assigned for profits and whatnot, it could be as good as a $1,400 to $1,500 month, which would be the best month I've had year to date. It would be a phenomenal month. The account would be at all-time highs. We'd be entering August with a clean slate. That would be best case scenario. That would be amazing. But that's not for another 2 weeks. So as for now, we just got to sit tight and try not to stress ourselves out. So that's it, guys. Thank you for watching. I hope you enjoyed. If you did, hit the like button, subscribe for more content, and I'll see you all next time.